Namaste and welcome to a presentation on equity issue under accounting of shares and debentures. If we take up an overview of share capital and share premium under equities issue, we will be covering broadly the share application, share allotment, refunds where the applications are partially accepted or rejected, calls on shares depending on the number of calls the company wants to make, and if there are any defaults in the payment of allotment money or payment of calls, how do we treat the arrears, any interest on the arrears. Similarly, an opposite case of that, if someone wants to make the payment of calls in advance when it is known that the call is forthcoming, then how does it affect the share capital and premium of a company? And does it carry interest? And how does it get incorporated into the working? And in respect of shares which have got calls in arrears, company's discretion to forfeit them and reissue them at a price which is most convenient to the company, and at the same time it is a commercial proposition which is a win-win for both the shareholder who loses the share and the company which reissues the share. Any problem that we take under share capital and share premium or equity issues will go through these areas. We have selected illustrations which are available in the study material, but have picked unique cases where by a simple example we can cover all aspects of these modalities and have a proper grip of the subject. Let us proceed further. For sure benefit, let us apply three principles in the course of our working. We will follow a standard template so that it makes the process easier, and let's avoid workings outside the template, minimize the workings, and when a problem is being solved, ensure that every word that is appearing in the problem is within your weave and you understand its meaning from all angles. If these three things are done, the problems could be solved in a standard, structured, simplified way. Let us get going. Here is a problem, illustration number 12. And it says, JK Limited is a company with an authorized capital of 10 lakhs equity shares of rupees 10 each, of which 6 lakh shares had been issued and fully paid as of 30th June 2018. This is the capital the company has. Fair enough. Our problem doesn't get affected by this, but the company proposed to make a further issue of 1 lakh of these rupees 10 shares. Means face value of the share is 10 and we are issuing 1 lakh shares. Then of 10 each at rupees 14. We have got a template where total price is 14, face value is 10. In effect, we are saying it has a premium of 4. Each, the arrangements for payments being rupees 2 per share payable on application. Here we have indicated the application stage, application when we receive, and subsequently when it is considered for allotment of shares. And rupees 2 per share payable on application to be received by 1st July 2018. Means we have put the dates then and there, 1st July 2018. Then allotment to be made on 10th July. Allotment may be made on 10th July and a further rupees 5 per share including premium to be payable. This is to be payable on allotment. If rupees 5 is to be paid and if we know 4 rupees is premium, then the allotment money is rupee 1. 4 and 1 makes the total of 5 which we are talking of here. Allotment to be made on 10th July after getting rupees 5 per share including premium to be payable. Fine. Then the final call for the balance to be made. What is the balance? Application is 2, allotment is 5, 7, total price is 14. Therefore, final amount is the differential amount of rupees 7. That's we have to go understand, grasp and then implement it. Balance to be made and the money to be received by 31st January 2019. These are the data inputs which covers word by word. Then applications were received for 3,55,000 shares. Applicants for 5,000 shares received allotment in full, means they received 5,000 for 5,000. Okay. Then applicants for 30,000 shares received an allotment of 1 share for every 2 applied, means for 30,000 applied they got 15,000 shares, 1 for every 2 applied. No money was returned to the applicant, the surplus of application being used to reduce the amount due on allotment. Here he has applied for 30,000 but he is allotted now 15. The additional money paid on the 15,000 is not straightaway refunded. It is used against allotment money of the allotted shares. Okay, that is the principle. Applicants for 3,20,000 shares received an allotment of 1 share for every 4, means 3,20,000 divided by 4, 80,000 shares were given to them. The money due on allotment was retained by the company, the excess being returned to applicant. In this case it was fully adjusted against allotment. In this case, against 80,000 shares, whatever application money on 3,20,000 is there, it will be used against allotment money and balance will be refunded. Fine. Excess being returned to the applicant. The money due on final call was received on the due date, means due date for the final call was 31st January 2019 is when the call will be made. It will have a period of 1 month or so, means there is no default, there is no calls in arrears. This is what the problem states. The money due on final call was received on the due date. You are required to record these transactions in the journal of JK Limited. Now, whatever inputs was given in the problem, we have already put it into the template. There is no other input than what we have populated here in the template. Okay. Now, let us just see how does it work out. We have got application, we have got allotment, premium, allotment money, and then final call money due. Let us take the first case. 5,000 applied, 5,000 allotted, means with application he was supposed to pay 2,000, he has paid 10,000, 2 into 5. After allotment on 1st July, the amount he was supposed to pay is 10,000. Then it matches. Subsequently, he has to pay premium at the rate of 4 on 5,000, means 20,000. He also have to pay an allotment money of 5,000, 1 rupee into 5,000 shares, means now he needs to pay 25,000. He has no extra money paid in the application because 10,000 due, 10,000 received. There is no refund to be made to him. Therefore, on allotment, the balance due from the first category is 25,000. Fine. Second category, 30,000 was the shares applied for. 30 into 2 is 60,000. Allotted is 15. Therefore, he is supposed to pay only 30,000. He has paid 60,000. At the rate of 4 on 15, premium to be paid is 60,000. Allotment money is 15,000. Total he is supposed to pay 75,000, but he has paid here 30,000 extra, which we will adjust against it, and balance 45,000 he needs to pay. And similarly, for the call at the rate of rupees 7, he has to pay on 15,000 is 1,05,000. And coming back to the third case where one share allotted for every 4 applied for, 80,000 at the rate of 2 on 3,20,000 shares he paid 6,40,000. At the rate of 2 on 80, 1,60,000. 640 minus 160 is 4,80,000 is extra paid by him. But what is his allotment? Premium he has to pay 4 into 80,000, 3,20,000. 80,000 is allotment money. 320 plus 80 is 400. 4 lakh he has to pay, which we will adjust out of 4,80,000 extra, and we shall be refunding the additional 80,000. Because our set off is only up to allotment stage, we will not carry it forward to calls. Therefore, he will be refunded 80,000. Then coming to the calls, 7 into 80, 5,60,000. Now the template is completed. Money received with application, 3,55,000 into 2, 7,10,000. Application money, 2 into 1 lakh, 2 lakh rupees. Premium at the rate of 4, 4 into 1 lakh, 4 lakh. Allotment money 1 into 1 lakh. And we are adjusting 4,30,000 against 5 lakh required. And we are refunding 80,000. And out of 500,000, that is 5 lakhs, 430 is received here. Balance will be collected as allotment money balance due. And call money is supposed to be collected as per the date indicated. Now we know how much to collect, when to collect, under what heads to collect. There is absolutely perfect clarity on the things. And one more thing you need to understand, the money due on final call was received on the due date. Therefore, there is no delay, no default, no arrears, 100% recovery. Whatever we wanted to collect in terms of capital, 1 lakh of total value of 14 is 14 lakh has to be collected by the company under these heads. Let us go to the second statement. Taking the template which we did, let us take the first item, money received with application. What is the journal entry that we write? Bank account. The date is known to us, 1st July 2018. Bank account to equity share application, 7,10,000. Second entry, application money on allotted shares. It is after the board resolution. Equity share application into share capital is 2 lakh rupees. It is entry number 2. Then number 3 is premium. Equity share application, equity share allotment 5 lakhs, of which 4 lakh is premium and 1 lakh is share capital. That is entry number 3. We are going in the order of the template. Allotted money, allotment money on the allotted shares, 1 lakh to be collected. And we have 4,30,000 and 80,000. What we can do is, we have received equity share application money has got surplus of 5,10,000 because only 2 lakh is appropriated to bank account. 80,000 is for the refund, and equity share allotment adjustment is 4,30,000. That leaves us with balance money to be collected. The statement says we have received money as was to be received from the applicants. There is no arrears. Therefore, allotment money is received on the due date of 10th July 2018. And we have got equity share first and final call 7 lakh rupees to be received. It is also received by way of bank account to equity share first and final account. If you see the red bullet points, they are all the entries to create liability, and the green points are to indicate the amounts received. These are bank transactions. The other one are credit to share capital, credit to share premium account. These are the 7 journal entries to be passed in the books of JK Limited, and we go by the template very strictly. And we could cross verify this with a bank account. Taking the same 7 JVs, we can say bank account to equity share capital 7,10,000. Then we have got, there are no bank transactions. Bank comes the fourth one. Equity share application to bank 80,000, which is a refund. Then comes bank account to equity share allotment 70,000 received. Then comes entry number 7 lakh received in respect of first and final call. 14,80,000 received, 80,000 refunded. We have received 14 lakhs as the balance in bank account. What does it comprise? 2 lakhs, 5, 7 lakhs, which also includes 4 lakhs of share premium. 7 plus 7, 14 lakhs, which is 10 lakhs plus 4 lakhs of share premium, which is nothing but 14 lakhs incremental bank account balance. And that is the termination point of this particular example. Now let us take one more problem, which will be on a similar pattern, going by the same, taking the template. 1st May 2014, company issued 5,000 equity shares of 100 each, means face value 100, no premium. On application 20, on allotment 30, on first call 20, and on final call 30. It is an issue at par. Then it says applications were received on 15th May 2014, and here it says for first call the date is 31st July for payment, and for final call the date is 30th August. Then we have applications were received on 15th May 2014 for 6,000 shares, and allotment was made on 1st June 2014. Applicants for 2,500 shares were allotted in full. Those for 3,000 shares were allotted 2,500 shares, and applications for 500 shares were rejected. Balance of amount due on allotment was received on 15th June 2014. The calls were duly made on 1st July 2014 and 1st August 2014 respectively, and that leads us to proceed further. Applied for 2,500, received 2,500 at the rate of 20, paid 50,000, amount available on application 50,000. 30 rupees has to be paid on allotment, 75,000. It has to be paid by 15th June, though the claim raised on 75,000 on 1st June. Then first call, July 14, 50,000, that is 20 into 2,500. Final call, money due on 1st August, 75,000. This is the responsibility in respect of Group 1 or Group A. Group B, 3,000 applied for, means 60,000 paid. 2,500 into 20, 50,000 was due. 10,000 is paid extra. Their allotment money due is 30 into 2,500. Means they have to pay balance 65,000. And in respect of first call, 20 into 2500, and final call 30 into 2500. From there, come to C 500, where it was rejected, means on 500 into 20, 10,000 received, no allotment made, therefore it has to be refunded along with the allotment of shares. Now if you take the total, application money received 1,20,000, application money due is 1 lakh, 20,000 is extra received, 10,000 is adjusted against allotment, 10,000 is refunded, allotment money of 1,50,000, 10,000 adjusted out of allotment application money, therefore balance 140 to be collected, 1 lakh at the rate of 20 on the total quantity collected on first call, and final call at the rate of 30 is 1,50,000. Effectively 100 into 5,000 is 5 lakhs is the amount to be collected at the end of the situation. Now let us proceed further. What it says: the calls were duly made on 1st July and on 1st August respectively. One shareholder did not pay the first call money on 150 shares. What is the first call money on 150 shares? 150 into 20 is 3,000. Means there was an arrear of 3,000 out of this 1 lakh. Therefore, the net amount became 97,000 instead of 1 lakh. Then, which he paid with final call together with interest at 5% per annum. When was the final call? Final call was after 1 month. This money he paid along with the final call. Therefore, along with the final call, there was also an inflow of 3,000. We are adding it here, which he paid with final call together with interest at 5%. What is the amount? Amount is 3,000. Interest at 5%. Instead of 1st July, he paid 1st August. Means there is a gap of 1 month. He has to pay interest for 1 month. Simply divide annual interest by 12. 3,000 into 5% divided by 12 is 12.5 rupees is the interest received by the company. This is a receipt, cash receipt or bank receipt. Then one more person, another shareholder holding 100 shares did not pay the final call money till the end of the accounting year. He's another person. He didn't pay final call. Final call is at the rate of 30. Therefore, the arrear was 3,000. Therefore, final call will have collection of 3,000 of old dues, but a fresh arrear of 3,000. The amount will be 150 plus 3 minus 3, it will be 150. Means at the end of all this, you have got net arrear of 3,000. Means instead of 5 lakhs, the company's capital account will show 4,97,000. 3,000 will be shown in the calls in arrears. Second, on 31st October, the company closes its books. As of that day, we had an arrear of 3,000 and the company charges interest at the rate of 5% on delayed payments. Now, he has not paid on 1st August. He has got time because the time given for payment is, as we saw here, last date for payment is 30th August. If he doesn't pay 30th August, then he starts accumulating interest on 3,000 from 30th August, September, October, 2 months. For 1 month it is 12.5, for 2 months it is 25. This is accrued interest. This is received interest. This is accrued interest. Now this is the template. Nothing more, nothing less. From here we just proceed. For shareholder, we are just making a note of whatever we discussed just now. Now take the template and pass the entries according to what is the net amount which is shown as received. First, money received with application 1,10,000, 1,20,000, pass the entry, bank account to equity share application account. Second, application money allotted is 1 lakh on 5,000 at the rate of 20. Pass the second entry, equity share application account to equity share capital account. Third, allotment money on allotted shares. Once again, crediting the share capital, 1,50,000, equity share allotment account to equity share capital account. Then we have to refund 10,000 rupees to the person who was not allotted any shares. And second, we have to adjust 10,000 towards allotment. We can pass that entry. Equity share application account, out of 1,20,000, 1 lakh is adjusted, 20,000 is balance. It is 10,000 is refunded, therefore to bank 10,000, and to equity share allotment account is another 10,000. Next comes allotment money balance due was collected, 1,40,000, and then we have made a call money. Equity share first call is 1 lakh rupees, raised as an entry. Then we proceed further. After raising the 1 lakh, we know that we have received 97,000 only for receiving the payment. Bank account is 97,000, calls in arrears is 3,000, equity share cap first call account is 3 lakh rupees. Going further, final call, we have made a call of 30 on 5,000 shares, 1,50,000. Then when it came to realizing it, we realized 1,47,000 because there was a call in arrear of 3,000, 1,50,000 is the total share final call reversed. Then we received along with the final call 3,000 rupees pertaining to calls in arrears of the first call, and we also received 12.5 rupees of interest. Therefore, bank account debit to interest on calls in arrears account is 3,000. And last point, at the year end, we are creating a provision for the interest due on the calls in arrears in respect of the second shareholder. 2 months interest on 3,000 at the rate of 5% is 25. These are the journal entries. And we can make postings in the bank account based on this to ensure that we have collected the money what we wanted to collect. Bank account 1,20,000 initial application. Then we repaid 10,000 out of it. Then we collected 1,40,000 on allotment. On first call, we received 97,000, and on final call, we received 1,47,000. We received 12.5 as interest. We also received the calls in arrear of the first call. 5,07,000, 12.5 minus 10,000. Now, what is this 4,97,012? It is absolutely very clear. Capital is 1, 1.5, 1 means 3.5 plus 1.5, 5 lakhs. There is a calls in arrear of 3,000 and there is an interest of 12.5. Total of this is 4,97,012.5. That is the amount which matches with what is indicated in the problem as capital to be raised. Thank you so much. Thanks a lot. Hope you enjoyed it.